is blockchain? Blockchain is the technology that powers cryptocurrencies, to put it simply.
was about the third week into Kaki's weight loss battle where things really started to go downhill. She was eating salads 4 or 5 times a day. She was running on the treadmill 45 minutes a day, and walking her dogs on long walks on the weekends trying to lose weight. In the first couple of weeks, she lost weight. But then she hit a plateau, still doing the same things that she's been doing, but she stopped losing weight, and even worse, she started gaining weight back, even though she was working out extremely hard, and she was nearly starving herself. So what was going on?
All you have to do to lose weight and have the perfect body is to eat less. How many times have you heard that tired old lie? Want to lose weight? Go on an extremely low-calorie diet. Simple, right? Wrong.
What do we got, an ad?
Does not mean always being hungry. Losing weight does not mean
Where is this dude?
3 times a day.
Look at this
Or you
punk.
slam me with the hole. That's easy for.
It's funny. Why am I getting fat ads? All right. Testing 1, 2, 3. All right, how about if we kill that? All right, so let's see what's going on. YouTube is a bit glitchy this morning. One thing is telling me that it's not even streaming, but I think it is streaming. I think you're here. I think you're real. I hear you. I see you. Can anybody confirm? Can you hear me? Can you see me? Because YouTube isn't telling me the truth, I think. Oh, sorry. Yeah. We're here, right, Johnny? All right, cool. So, good morning. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk when you cannot afford to lose. So, good morning. Comment allez-vous? My name is Wayne McDonald. I am a currency trader. I love trading currencies. It's all about trading currencies. We can trade fundamental trades based in Forex. We can do like commodity trades in Forex. We can trade through correlation the direction of stock indices through Forex. We can do a lot, if not everything, through Forex. And the cool thing, of course, is better leverage, better taxation, mark-to-market, all these things that just can't be replicated in other asset classes. So this is the best thing you could possibly do. So thank you for being part of the Forex.Today YouTube community. Now, 15,700 subscribers? That was cool. Oh, Jeff says Off the Charts with Wayne McDonald was cool yesterday. Right on. That's at youtube.com/FXBootcamp. That was yesterday. That was cool. That was fun. And it was only an hour. Now, someone told me that my wireless mic was connected, but my wireless mic was not connected. So, next time we do it, it's going to be even greater. So I know the trick to confirm that now. Although it's interesting, in Windows, it won't let me confirm that you can hear me. It's really strange. And then when I turn it off, it'll show the mic test. And then when I turn that on, it just won't let me test. So whatever. We can get through it. It can get even better. So thank you to Traders Wait for sponsoring the Forex.Today YouTube community. They're a foreign exchange broker. You're a foreign exchange trader. And they are trying to invest into you up front. They want you to have skills and confidence that you need to one day trade real money, and not just for a couple of weeks, but for years and years and years and years. So for that, you really need to know how to trade, know things like patience and discipline. So in a way, you could say, wow, Traders Way really cares about me. Okay, that's one way of looking at it. Another way you can look at it is just say, you know what, it's better business to have customers that stick around, repeatable customers that trade and trade and trade for years and years and years and years and years and years. Not over trade, not over leverage, just But if you're successful, you will trade for the long term. They can keep providing you a service and earning an income. So successful customers are just better customers. So maybe they're selfish. Or maybe it's symbiotic, right? So whatever. So one thing we know for sure is they enter your trades in the interbanking system. And that may be enough right then and there for you to visit tradersway.com and become a client today. Cool. So I've been up for hours. I know I look scatterbrained. I can see it. I look terrible, but I'm up. I'm alive. I don't know what's going on. Just one of those days. I used to be pretty. So let's take a look. And markets are kind of meh. They're not bad, not good. Not brilliant, not perfect. But I'm sort of waiting for a follow-on. Okay? Kind of waiting for a follow-on. I'm being a little conservative here instead of aggressive. Yeah, maybe it's just another Monday, huh? Right? So anyways, yeah, I'm just kind of, I was not aggressive last night. I don't know. I've been doing a lot of yard work. I had the chainsaw out again. Burned through another chain in about 3 hours. I cut so many trees that it was brand new sharp. It was like as sharp as a ninja sword, and about 3 hours later, it was smoking through the trees like smoke. It was just dulled out. So I've been doing a lot of yard work, and maybe I'm just physically tired and mentally tired or something, but I wasn't aggressive last night. Or yesterday afternoon, or Friday even, with non-farm payrolls. So I'm not in any of these trades really because of that with NFP. And of course we know President Trump got COVID-19. I'm more interested right now because it doesn't look like he's going to be put on respirators, end of the world type stuff. The leader of the free world isn't necessarily on ventilators. So, okay, fine. But the next thing is we'll probably get a stimulus. And if the government was holding off because they were trying to see if the worst was over and if it was a waste of money, well, that idea is probably gone, right? So now to calm everybody, they're probably going to throw us 1.6 trillion. If so, dollar weakened. So I'm looking forward to that. That's what's next. So I'm in tiptoe in mode, let's say. Okay, this is Mutual Fund Monday, right? So I'm in tiptoe mode. We can start tiptoeing into a lot of these trades. I just don't have to be on the tip of the spear. So euro dollar, I do want to go up. I see my support here. We're still in the buy zone there. I get it. I know it. I know, right? I know it's good. So that's cool. What about the Kiwi? I'll have to back out a little bit. Okay. And yeah, it's okay. 66 was the number. We're at 66.50. It's okay. Yeah, it's okay. Right? Here is fine, there is fine. Here's a little dangerous because of the kickoff there. So yeah, you can be tiptoeing right into this now. So of course what you're doing is if you have the conviction to be a bull again and you're putting these bullish trades together. Remember, it actually started here and this is the follow-up. So we're 3 weeks into the bullish move. What I advised you, I guess 3 weeks ago, especially if you're in my live group, is to be focused on day trading up, right? So like, here's a day trade long, here's a counter trend day trade, here's a day trade long, here's a day trade long. So you should be day trading, and a revisit at 1750 is probably another day trade. So I want to make sure you know what's going on, right? You see how clear all that is? So like we can go to pound dollar. And this one was odd, obviously, because the pound is unique, blown through the monthly. So this doesn't give us the obvious tiptoe up, although higher high, higher low, this is a clear roll reversal, okay? This is the monthly swing, okay? So we know our number is 128. So what you should be doing now is, like I was showing you before, kicking off the 128, to the upside, because you'd be a bull, day trading bullish, okay? And so our trade for the day was 129.08, which you got. So you're done. Okay. So day trade, this one would have scared you. This one would have scared you. This one's plausible, but this one was the clear one, right? NFP's over, all that kind of stuff. You see? Okay. Now this I can see price action wise. This I can see price action wise, and then this trades more like a range. But then you have to understand that there's the COVID issue, there's NFP, there's a lot going on here, right? To muddy these waters. It's the post, right? Post all of that noise that this is plausibly your step up. But if you didn't have this in your mind, this would be irrelevant. And then, of course, you would have had this in mind as well. So you kind of have three things here. This in mind, this in mind, and this in mind. If you only trade pound dollar, I think this could easily be, missed like on a daily basis. This is a lot of noise, okay? And could talk you out of it. But if you look at this, and this in conjunction with what euro dollar is doing, and euro dollar in your mind is leading the way, not pound because of all the Brexit issue, it's clear. It's more clear if you're combining it with euro, because euro is more perfect. So again, let's go back to where's my position trading bullish? No, actually, I got to do the other one first. Position trading bearish. And October, did I do that right? Wait. Position trading bearish. And I know what I need to do. Okay, so let's reset this. Okay. All right. So if you're looking at euro dollar first and foremost, here's the sell zone for September. Now I wanted to be a bull, of course, but there's the sell zone, and then here's the exit zone. Okay. So to me, this is easier to believe than the pound. Right? JV says, I love how bias pivots are already in the chart. And that's the whole point. Bias pivots are actually removing information to keep you focused. And the most important part of it is that the decision has been made for you. So one of the silly little things I looked at back in my venture capital days is an entrepreneur came to us with a patent on a T. And his idea was people spend too much money on T's. They break too often. Now, of course, you have to chuckle. You're like, really? What percentage of your annual income do you spend on T's for golfing? Like, do you even care? Like, do people really panic? You're like, oh my God, I spend like $8 a year on teas. It's not a big problem, but for whatever reason, we had them come in. And so it was a T that had a pivot in the middle. And of course, if you hit the ball properly, with the T breaking, right, with the hinge, with the pivot, then it wouldn't break. It would just bend and you hit the ball. Now, we found out, the reason we were looking at it is we found out through experts that if you do it wrong, of course, if the T is perpendicular to your swing, you're still going to smash the T into pieces, right? So you have to focus where the T breaks. Now, the interesting part of it made you a better golfer. Because, guess what? Now you're aiming. So you would stand and you'd hold the T so that it would break away from you, right? It was parallel with the the ball line, if you will. So you'd have to aim the tee where you planned on hitting. And that small change in your process made you a better golfer. Because most amateurs don't aim. Isn't that interesting? So you just the process of you focus more on where you're aiming and less on all the noise, like all the other information. All the other information isn't helpful if you've already made a decision to sell. So to know where this pivot is, and this pivot, and this pivot, and this pivot, and this pivot, dude, people get confused, right? So here's another analogy. On Friday, I was out racing the M3s. We did two different cars. We had the 400 horsepower M4 something. No, it was an M4 actually. And it was a rear-wheel drive if you care about it. And then the other one was an M3 with the X drive, which is interesting because it's a completely different engine. Mounted at the front of the car, obviously, but driving the front wheels instead of the back wheels primarily. But then when you were slipping, it would throw energy to the back wheels, right? That was only 300 horsepower. The other M was 400 horsepower. And so with the instructors were telling us, and I've been through this before, so I knew this, when you're driving, you don't look out your windshield. You're looking out the side window. You're 2 or 3 or 4 moves ahead. So, right? You're always looking ahead. They say your brain follows your eyes. So if you're in the corner, flying around a corner, you should be looking at the next turn. You shouldn't be looking where you are now. You always need to be in the next turn. You always need to be in the future. And I was thinking about how much of a parallel that is to trading. Right? Just amazing how similar that is, because we're gearing for this turn, but we're actually focused way over here. And right? And literally in racing, you need to be 1 or 2 moves ahead because the cars are moving so fast. And by the way, the experience was just great because there was a lot of people that got out on the track and they were driving like old grandmothers. Pop, 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 pop. Oh no, look at turns, slam on the brakes. Car almost comes to a brake. And they're going through and they're going around the cones and stuff like that. It was really funny. And I was a beast. I was drifting in that first the M3 with the rear wheel drive. I was drifting around the corners, just smoking like no joke. When I got out of the car, you can smell the rubber of the tires melting. You can smell the brakes. Just fantastic. Just ripped it up. Full bore. The instructors gave me extra laps. They're like, that was great. Like they're cheering. Absolutely cheering. And then the next guy goes up there, like Goofy in an old time car. That's how you do it, yeah. Well, the thing is, like, you only touch the brakes, right? You flutter the brakes, but you're going in so hot. Like, I'm not kidding. Just ripped up that course. Just crazy. A little extra would have thrown me, into the stands. So it was just great. Just great. Oh, yeah. Okay, so Jay knows. Yeah, so even 3 laps around a small course in a Beamer, if you do it right, it's smoking. But anyway, so we had a good time. But again, the point is, the car is going around a corner. So think about the car going around the corner. Where's the windshield pointed? Okay? You're actually looking at the turn. You're looking at the wall, right? You're staring at the wall if you're looking out the windshield, especially if you're going fast because the car is like swinging around the corner. But where are your eyes? They should be out here. You should be looking out the passenger window most of the time. You're looking through the pillars. And so you're going around the corner and your eyes are this way. Your car is pointing west and you're looking north. And then, or I guess east and north, right? and then the car straightens up, and now you should be looking out out the passenger window, because the car is going straight, but you're getting ready for the next turn, and then you pull into that turn, and now you got to swing the car way over here, so you're looking left, and the car is just starting to make its turn, right? And you got to understand like when to tap the brakes, when to really, because you got to get the nose of the car down if you're going to turn, because you got to get grip. So you're not stopping, but you need to throw the car's weight forward so that you can get some weight on the tires so you can turn. Because you got to remember, there's only the size of 4 hands on the ground. That's how much of the car is touching. Now, if you're going fast around the corner, then all the weight is being thrown around, so you might only have one wheel that's actually literally touching the ground, and then you got to switch here, right? So that's why everything gets hot. But while you're throwing that weight, you got to be looking for the next turn. So you're looking left as the car is just starting to grab traction. So think of that in trading. You planned all of this out early. When you're in it, you're already thinking here. You're already looking here. You're not trying to figure out what to do now that you're in the corner. You're already planning for the next corner, right? So I thought there was an amazing analogy that, you're in a turn, but you're looking out the other window. You're not looking out the windshield. You're looking out the pillars. You're looking out your driver's side door window, preparing for the future. Okay? It's all about that. If you're in the car and you're stuck in your future, you're going to have to slow it down to 35 miles an hour like grandma. Okay? And by the way, many people did on the racetrack. You're like, this ain't going to happen. I look at them and I'm like, they'll never be able to trade Forex if they can't drive that car. So anyways, so now when you're here, this is the exit, right? Oops. Right? This is the exit. So what's a bear thinking now? A bear is thinking a new move here. Okay? They're here now, but they're anticipating the turn. And once you get some sort of turn, whether it's here or a little higher, once they start to see that they're in the turn, what are they going to do? Step on the gas and fire their trades out of the turn. Okay? See, they're braking here, and they're stepping on the gas here. And they anticipated a new turn here. Okay? So they're finding their lines on the track. So a bear is not aggressively selling now. But once they confirm that this is a turn, they're going to step on the gas sort of in this area. And they're going to take this down hard. And where they anticipate the next turn, right? You sold it on the 1 hour chart double top. Okay, you got the right price. I'd call that a bit aggressive, but we can dive in. So like if we go now to the bearish swing, it's not good. Okay. See that FD9? It's either wrong or your timing is way too early. It's way too aggressive on that time frame. These are weekly swings, right? So I would have looked at that and said, okay, not yet. I understand there's a monthly here. Okay, great. But I would do this. Okay. Now I'm fairly conservative. But I can see the need for bulls to want to take this north. And remember, also in the FT9, in the back of mind, mind. So it's not that I'm right and you're wrong. Don't think of it that way. Here's what's in the back of my mind. We get more and more discussion this week about a government stimulus, a fiscal stimulus. And if so, dollar weakens. Just the rhetoric of a deal's going to get done, a deal's going to get done, a deal's going to get done. If so, we're heading up here. So when I look at this, if I was a bear, and of course this is set up as a bear, and you sold a double top, I'd say, well, that worries me. I think we could be going here, but also it's above the weekly sell. But it's below the monthly. So I get where we are. I would have treated it, and I think bulls are really desperately needing to do this. Okay? So I would probably, well, like I did today, I'd probably pass. This is a very bullish entry, by the way, right here. Okay? This is a very bullish entry. So to sell this here on top of this bullish entry, with, I think, fundamentally speaking, we got a giant fiscal stimulus almost for sure going to be released. Yeah, the proverbial grandmother. Not all grannies are the same. Like I knew someone who I think when he was 35 was a grandfather. I think he was like 34. You start adding that up, you're like, oh snap, you had kids early, and then you're like, oh snap, they had kids early. The question here is, as far as gold and dollar, which ones are safe havens? I would go with dollar as the safe haven. By the way, in Off the Charts with Wayne McDonald, one of the things I covered was opinions by multiple professionals in the industry managing big money. They had opinions about gold, and I read their opinions and the reasoning for their opinions and explained how I believe they're not sort of mechanically wrong. Like if you wrote a textbook on how things worked, that's how it would work. So if they read a textbook, right, that would have been the right answer in a college course. And then I explained how I don't think they're correct in this situation because they don't understand any other situation. It's really amazing that I think you guys are well on your path to being much smarter than the experts are now. And by experts, I mean someone that's making a couple of $1 million a year. So one guy, for example, said, because Jay Powell said he was going to allow inflation to go above 2%, that gold went up. And gold has gone up 35%, something like that. And he was trying to explain to his clients that's why. Gold is up 35% because Jay Powell said he'd let inflation go above 2 to maybe 2.5. That it was a moving target. You're like, dude. Do your clients believe that? You're like, really? Really? That's why. Just amazing. So what I think the answer is of course in the webinar, so you can watch Off the Charts with Wayne McDonald. It's pretty amazing. All right. So let's get on with it. So dollar, yeah. So anyways, that's what's in the back of my mind for dollar this week. See, I'm not sure if you guys fully believe it yet, but I think you're going to be great. I think my opinion is the world has had mediocrity for so long that there is a massive change coming. There is a massive change coming. And we went through a massive change. And I remember, like, one of the things I used to do is every week I'd listen to an interview with an old trader, money manager, wealth manager, investor, whatever. But these are like the old guys that are, they're 80, they're still working, and they've made billions, right? And they don't care about ego and stuff anymore. They've done everything, and everyone to them is just a kid, right? So after a while, you just don't really care, right? And so I love it listening to interviews with these guys. And one of the interviews that really stuck out, I don't remember who it was, but he was saying, he studied, engineering or physics or something in college, couldn't get a real job after college was done. So he went to Wall Street, and he said he showed up and he didn't know anything about trading and investing, but they hired him. And once he did some basic education and training, he used his engineering mind, and he looked around and he's like, oh my God, nobody here understands anything. These are all just a bunch of jocks, glorified salespeople that are sitting and they're trading, and they're like, they have no methodology, they have no consistency, they have no process, everything is random, everything is a gut check. And he's like, he found success very quickly, and he said because it was systemically mediocre. He just said, look, everyone around me was very mediocre at best. He's like, I climbed to the top very quickly because generally people were not that good. And that was Wall Street. And I think as you go through and you take the lessons that I'm teaching you technically and fundamentally and stuff, you will find that you will actually understand a lot more than what you consider now the experts. And so that's why I like to read interviews with you guys of professional money managers, just to let you know that they're really not that good. They really don't work that hard. They spend most of their time just keeping their clients happy, so they do a lot of dinners and they go golfing and stuff. That's primarily what they do, and they make millions and millions and millions and millions of dollars a year personally. And it's not because they work hard as traders or investors. And it's not because they're smart, PhD, brilliant, see the future, Illuminati stuff. No, most of them took over their dad's practice. And it's amazing that these guys might work go to the office for 2.5 hours, waste most of that time, go for a 2-hour lunch, come back, waste another 2.5 hours at the office, and go home early so they can watch the kids play basketball. And you're like, this idiot makes $6 million a year? Yeah. I think you could do a lot better. And the thing is, if you have an entrepreneurial mind, you know that you can outperform, and that industry will change. So the guy we interviewed, or the guy we talked about in the webinar last night at Off the Charts, this guy was producing 17% a year after fees. 17% a year after fees. So he's pumping out 20, right? 20% a year. He has $131 billion under management. All you have to do is, with low volatility, produce better than that consistently. So let's add it up. 1.5% a month. 1.5% per month would destroy that number. So what if you just could do it 1.5%? Let's say 2%. Let's say you do 2% a month. Month after month after month. without fail. Somehow it's just your magic number. Don't say that's 24% a year. It's compounding. It's 30% a year. This guy's doing 17 and has 131 billion under management because people just they find that amazing. Well, if you find that not amazing, then what is it attractive? If you're like, dude, 17%? That's not even that great. It's not even that great. You're like, really? 17% a year? Okay, great. All right, fine. Fine. By the way, the S&P 500 has probably averaged that the whole time, and you don't even have to pay them a commission. It's an index, right? But anyways, let's just say if you think you could easily do 2% a month, 1.5 is like, Joe, 2%. You're like, really? That's it? Then what attracts people to invest with this guy? How could he attract 131 billion if you think you could easily make 20, outperform him? It's the low volatility. It's the consistency. So by low volatility, I mean you're not down 8% one month and then up 12% the next month and then you average the difference, right? No. That's volatility. What if, right? So if this guy is just producing reliable returns per year, if you could just count on this 17% every year, then that's what attracts money. He never calls him up and says, you know what, we're down 80%. Right? Now, of course, when he does do it, he can blame, oh, well, the market crash is not my fault. So if you can do that, I want you to focus like that. That is what your goal is. Your goal should be the consistency. You don't need to make big money. Make small money all the time. Okay? I want you to think that way. You never, ever, ever need to bet big. Okay? Cool. So there's your Aussie. Aussie doesn't look bullish to me. I'd like to be a bull. Well, how about this one? Okay? We got our support, but we also got our resistance. Okay? There was a good catch. This was catchable. So now you got to wait. Okay? If you buy up here, you don't get it. If you buy now, you don't get it. You just don't get it. In here, you had a Friday front run, but with NFP, I get it. Right? I get that you can't buy that in NFP. I mean, you can, right? But it's difficult after non-farm payrolls. And it's also difficult, when you don't know the outcome. Like, you don't know, you wouldn't buy it here if you were worried, because we didn't know anything about Trump being sick except he was sick. So if Monday showed up and Trump was on ventilators and it looked bad, like, uh-oh, then this Aussie yen would be way low. You have to understand that. So if you didn't buy on Friday, I totally get you, but you knew here you could. Okay? That's not the market open. That's Australia open. That's, okay? That's the Sydney Open. So, yeah, that's a pretty good trade. Because now you know it wasn't that bad. Okay? So that's that. So we call that a 1, 2, 3. 1, 2, 3. Target up here. So I think what I'll do is I'll catch the next. Okay? Okay? Kiwi. Okay? Not a pretty chart, but what do we know? Talk to me, Goose. What do we know? That's a monthly September top. That's a monthly September bottom. Okay? And if you're a bull now, so that's bearish. If you're a bull, this is your buy zone for the month, which means now you should be tiptoeing into weekly swings, and that exists like this right now. Okay? So if you zoom in, let's go into a 1 hour now, or even a 15-minute chart, it was out of position. So the only way you would have caught it was Friday front run, but this Friday front run, like I explained earlier, is not like your typical Friday front run, because technically everything's fine here for a Friday front run, except you don't know the outcome of the President of the United States being sick. Not just sick, but with an illness that kills people. So again, if Trump was on ventilators, we'd be done here by Monday, right? If Sunday afternoon we knew he was very sick, then yeah, this Kiwi yen would be straight down. Okay, right now, okay, that's fine. But this is OOP and difficult to catch. Okay, and so if you go in here, I guess maybe you might have caught a 4 hour 21. I doubt it. I mean, maybe you did, but I wouldn't expect you to. Looking at the pound, okay. I want to change this up and look at the confluence of weekly and monthly together, okay, because I think there's a lot of noise on this. Okay, weekly target is 38. I want to remind you back in here, okay, I want you to acknowledge this. In here, we started talking about 1,000 pips or more to the upside. How many people here can concur this? Who concurs? Okay. So that has to be in your game. Okay. So with that in mind, okay, that was at 34. We're now at 37, so we're already up 300 pips, well on our way. The technique that you use is to be day trading this bullishly. Okay, and we've already done this on pound dollar, so it's going to be very similar, but like tradable, tough, 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 tradable, tradable, tradable. Okay, so tomorrow buying it around 36.5 seems like the trade. And by tomorrow, I mean today. When it's stuff we avoided, or the other way of trying to do that is, well, there's a couple of ways of doing that. One, I try to keep my eyes on the weekly swing. When I day trade, I realize that the bigger move is the monthly and the weekly. So I keep looking back, I keep looking back, I keep looking back, and I'm like, be strong, Wayne, be strong, be strong. Okay? Oh, right on, Gary. This might have been a play. Was this planned out in our weekly swing group? Did we have any of these? No, because I put everyone on Swiss franc, right? Yeah, that's right. Because I assumed you already had this. All right, cool. So the other way, okay, so let's say I bought this. Where's my stop? What's a basic operating procedure? What's the standard operating procedure? That's right, just below support. Cool. So on and so forth. if I bought somewhere in here, it'd be just below support. If I had bought somewhere in here, it'd just be below support. If I had bought somewhere in here, this might have knocked me out. If I had bought in here, it'd be below support. Okay? Because you know support would be about here. This one's close actually too. So they're close, but a lot of these might have held. So let's maybe take a closer look. Let's take a closer look. I know how to do this now. We could do pivot points. These are daily, right? Yeah, let's do it that way. And I need to add a few extra days. Okay, cool. So when you day trade, your buy zone is pretty clear, and then you put a stop below support, and you'll see why now. You see how amazing this is? Okay, so let's go back in time. First of all, I'm going to identify all the buy zones. Okay, buy zone. Oh, can't see that. Hang on, let me put the highlighter on. Okay, buy zone, buy zone, buy zone, buy zone, buy zone, and buy zone for today. Okay, now we need to identify where to put the stop. We know just below the support. We know just below the support. We know just below the support. So this might have got us. We know just below the support. Okay? We know just below support. And so on and so forth. So it really comes down to how close to support when you're day trading. This is why I say, like, focus on where you'd put your weekly support, right? Where would you put your weekly stop? Where was your weekly entry? Where is the role reversal? Where is the support? But the standard operating procedure is you want it just below support, just below support, just below support. You can see how in the tight, right, in this case, we're not trending anymore, but even then the support is there for a reason, isn't it? Okay. So how close, having observed this for pound yen, okay, how close, when I say put it just below support, what does that mean? Is it 10 pips? Is it 30 pips? Okay. That's going to be always a judgment call. But a lot of you guys keep your stops way closer than that. Way closer. Most of you guys have your stops way, way, way closer than that. These are just pissy little day trades. And you're trying to swing trade with 18 pip stops. That ain't going to happen, son. Okay? Most of this is way beyond what you're doing now. So you should observe some of this, go back over time and say, really, if you were to have traded this, where would your stops have been best put? Okay? This is the part that makes you a different trader. If you went back and spent a couple of hours today, or even 1 hour today, most people won't do that. What if you spent 1 hour today picking your favorite currency pair, the one you love to trade every day, and you simply analyzed weeks of day trades with the assumption of where would you have thought to have put your stop, and where would the actual proper stop based on what you actually saw. So for example, just like I did with the other stuff, right? So let's say I'm looking at all this as a bull. So the first thing I would do is I would look, oops, I don't want to do that. Let's change the color, by the way. All right, so let's look at this as a bullish point of view. If I was a bull, let's make this even fatter. If I was a bull, I would have bought in here. If I was a bull, I would have been bought in here. If I was a bull, I would have bought in here. If I was a bull, I would have bought in here. If I was a bull, I would have bought in here. If I was a bull, I would have bought in here. If I was a bull, I would have bought in here and bought here and bought here and bought here. First of all, how many of them worked? I just want you to, this is a mental exercise. This is not an exercise of right or wrong. It's how are you training yourself? Okay? Did this one work? Probably not. Did this one work? Yeah. 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 Did this one work? I don't know if you caught that. Did this one work? Probably not. Okay? Maybe. Maybe. Right? It all depends. I don't know. So now the next thing is, where would your stop have been? Like, how, if you see your stop is the support. So remember, I say below support. So if you say, well, here, that particular day support was 135.33, where would you have put your support? We know if your support was at 135.10, you would have made money that day. So we know below support is somewhere in that zone. Okay? And so what would have been the most ideal number? Then the next day. Okay? Oh, that's the one we did. 135.41 was the number. 135.41. Remember, I don't say put your stop at 135.41, but below 135.41. So where would you have put it? Maybe below this one, right? And then so on and so forth. What about the next day? 135.15 is the support. Well, you might have just given up, because this one you'd still be in, and this one you'd still be in, and it ain't going up anywhere, so you talked yourself out of it. That's probably actually the best thing. But my point is, where would you have put it? What would have worked best for you? How many pips away? How many pips away? How many pips away? And if you do this 100 times and find out sort of what is the average of how many pips below, then you could say, well, typically you like to have your stop, 8 pips below the M1, and 60% of the time that worked every time. It kept you in the trade. Or you find that you can't get a typical number, and maybe then you go back and say, well, if you'd used your weekly stop on your day trading, would that have worked better? The point is, I want you to have a form of scientific methodology to improve. Staring at your charts, flipping trades on 5A crosses will not make you a better trader. Staring at your charts, throwing down a bunch of trades will not make you a better trader. Okay? Going to the driving range and hitting 120 slices in a row will not cure your slice. Golfing twice a week for years and years and years will not improve your golf game. You have to have a proper scientific methodology to improve very specific skills. And so that's what I would suggest. If you just spent an hour today going back through these and say, where would you have entered as a bull? Or let's say you're a bear on this barrel. As a bear, where would you have entered? Where would your stop be? What is the average stop level that would have worked best based on your opinion? And of course, you're also reaffirming what market conditions you wouldn't have been a bear or a bull. Okay? Because you're like, no bullish entries, no bullish entries. Look how great you did this whole period. You went weeks without losing money. And then you see the aha moment, and now you game on. And then how would you have traded it? And what would have been the best case scenario of that? And what can you learn from it? Okay? You see that? That's how you're going to improve, by the way. Okay. And I guess we got to finish up. We got to do kitty CAD. This is our plan from what, 2 weeks ago. How did I do? This is the plan from 2 weeks ago, maybe longer. Double bottoming on an exit zone. Remember, we're paying attention to oil at the same time. Triple bottom, quadruple bottom, whatever you want to call it. Breakout, pullback, 1, 2, 3, long and gone on 79. So what do we know here? We know this is an exit zone, both weekly and monthly for bears. We know this is an M2. This is a weekly buy after a weekly and monthly exit. Bears had their turn. Bulls are now entering. Higher high, which we predicted. So now this is now the follow-on to the higher high. Higher low. Well, once again, this is President Trump getting sick. So I don't know if you'd be so confident going into the weekend that this just has to go up. But by the time the market opened on Monday, you did have a lot of, or Sunday for me, you did have a lot of information that it wasn't that bad. And, of course, we know this is, things are not so bad for Trump, but improved for our fiscal stimulus. Okay? Okay? So, in that case, this is the technical analysis. Remember, right? Technical analysis. Technical analysis. We're not talking about your fundamental anymore. Technically, this is a higher high. So technically, if you had entered here, you would be expecting this. Because we know this is the M2, this is the M2, this is the central. The next thing would be the roll reversal, and then the breakthrough, okay? Now, where are the bears going to challenge? Well, this could be an Arctic turtle up here. So if we can squeeze a little higher, this would be a bearish Arctic turtle. The first entry for on a monthly basis is here. But again, this is really the bullish exit. That's what creates the Arctic turtle, where bulls are trying to get there. So if they do, they take profit. Then it drops through, and then the bears get their opportunity and brings it down. Okay? Okay, so that's that. So if you believe down, that's fine with me, but it's technically not correct on this pair at this time. If it drops like this and then you start to sell, that's up to you, okay? So if you're a bear, this is the first price you'd consider, but you have to have the price action first, okay? The second thing of why up, and again, this is based on analysis going back 3 weeks now. We're 3 weeks into this trade, okay? It is stepping up, technically, right? Cool. So that's why bears need to be careful. The other thing, right, besides CAD, besides oil, if we're just talking about yen, and if we're just talking about risk on, the one thing that's not on this chart, and if you're a bear, you need to recognize and respect, is that the fiscal stimulus, if it's discussed this week, if there's real negotiations going on, if the news covers it, if it's discussed, if there's real discussions, real negotiations, that it's not that if a deal will be done, it's just at what number the deal will be done. So if they are close to a deal this week or then next week, then what you will find is the yen and the dollar will weaken. Okay? Aisha says, why are we buying pound yen in a down? Whoa, 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 whoa. First of all, I don't know why you're buying or selling anything, but you're saying why, I mean, first of all, that's not a downtrend, is it? Okay. So who said this was a downtrend? It's been up since September 23rd. This right here. Okay. So Aisha says, I was waiting for the break of the daily resistance to buy. Well, I'm not sure if I understand you, because typically you're not buying breakouts. I mean, yes, you are, I guess. So here's how you handle this. So this is pound yen day trading. So what you're supposed to do now is buy this. So I don't know what you mean by waiting for the high. I mean, that's what you'd be trading. So yeah, I'm not sure how you're saying it. But right now what you have is an up, 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 down, down, up, 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 down, down, up, 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 down, down. Up. Like this is what you should be trading. Okay? And that started way down here. This is the key moment in time. Then we start trending higher high, higher lows, and this is where you get your roll reversals, right? And that's why I was showing you your stop placements, because it's not bearish. Yeah. So, so this is what you should be doing. Now, the interesting thing is, as you get experience in this, you'll see that very often the trades you don't always wait for tomorrow's trade. That's why we look at these trades today, that very often you get the trades already. You might already be in tomorrow's trade. So cool. Yeah, you're probably right. Right? You bought 2 weeks ago, but lost because it was down. Yeah. Well, you don't know why it lost. There could be many reasons why you lost money. But, it doesn't turn bullish until here. Okay? So if you're day trading, for example, this is an easy win. This is an easy win. This one, I'm not sure if you even got in, right? Because it's out of position. You might have gotten it. It's tough because it's very overbought. This one is a question mark. This one you probably did survive. This one I'm not so sure. You would not have liked this, of course. This you might have survived, but you wouldn't have liked it either. Okay. If we look at this from a different point of view, okay. So where are we talking about? Okay, here's the giant kickoff. Okay, that's great. And then here's the weekly swing. Okay, and you notice with the weekly swing, you avoided all of this noise. Okay? Because you're already out. Okay? You're already out. Okay? And this weekly swing is tough. It's a tough one. So like you'd have to go into like a 5-minute chart. And you had about an hour to pull this trade together. Okay? Yeah, man. Well, this is the kind of stuff we do in the swing trading group on Thursdays. So we could, like, as a swing trading group on Thursday, go through all of the day trades. Because one of the things we've been focusing on is developing a monthly swing trading plan, folding in the weekly swing trading plan, and then folding in the day trading swinging plan. And very often you get situations where you start out your monthly swings and now everything's out of position because you're right. So now we got to drop into the day trading to carry out the further trades. Because I don't want you to make one monthly trade and one weekly trade, but I want you to have 20 trades in a month, maybe 25 trades in a month, all off in the same direction for the same reason, because you have a fundamental bias or seasonality. So yeah, so that's how we do that kind of work, Emmanuel. So bring it up in the group on Thursday, and we'll definitely do it. Yeah, certainly don't get caught in the middle, right? So you see this, followed by that, followed by that. This is standard price action, guys. Price action. So if you're struggling with these concepts, guys, I don't know what else to do. The training courses cover all of this. It's 78.6% discount right now. Like, I don't know what more to do. If you're struggling with these concepts, you need to double down. Oh, Gary got this on Friday. Yeah, it's scary with the news at the time, but good job. I'm glad you're on it. All right, guys, I'm gonna go. I'm hungry. I'll just be honest with you. I'm starving all of a sudden. So, yeah, exactly. That's the thing, though, right? 78.6% off. If that doesn't push you over, it ain't gonna happen. So, you'll continue to struggle. You'll continue trying to figure it out on your own, like teaching yourself golf. You'll go to the driving range and hit 150 bad shots in a row and wonder why you're not getting any better. Because you're training yourself how to do it wrong over and over and over again, but somehow expecting to get a different result. So, peace on earth, may the pips be with you, may your profits be above average. I will see you tomorrow. Please subscribe, please like, please leave comments on the videos. The link to my book is in the description below. A link to Trader's Way is in the description below. A link to my chart templates is in the description below. The link to the training courses are in the description below. There's a lot of resources in the description below. And then, of course, I'm here every single day for you. I will see you tomorrow. Thank you for being part of the Forex.Today YouTube community. I'll see you tomorrow.